When you look at a stock chart, every single line, every little tick, it tells a story. Today on The Explainer, we're going to decode the pretty dramatic and frankly contradictory story of a stock called IVP. So let's get right into it.
Okay, let's just dive in. The whole thing kicks off with this really powerful, unambiguous number, a technical score of 5.41. Now, in the world of technical analysis, a score like that isn't a suggestion, it's a declaration. It screams strong bearish. So a score like that, you gotta ask, right? What is really going on here to get such a grim outlook? Is all the data pointing in the same direction? Or could there be maybe a little glimmer of hope hidden somewhere in these charts? That's what we're here to find out. So let's start where any good diagnosis begins, with the big overall picture. And that big picture is pretty much painted in one color, red. The report makes it super clear this isn't some short-term dip or a minor little correction. No, we're looking at a strong, persistent downtrend that's visible whether you zoom in on the last few days or zoom out to the last few months. Almost every major indicator is pointing straight down, signaling some really significant weakness.
All right, now let's dig a little deeper and check the core vital signs of the stock's health. And we're going to start with the most important one, the trend itself.
And to do that, we first have to get a handle on simple moving averages, or SMAs. I gotta say, I love this cruise ship analogy. It's perfect. SMAs help us see the real momentum by smoothing out all that daily price noise. And a huge ship like that, well, it just doesn't turn on a dime, right? And neither does a major trend confirmed by these averages.
And wow, does this table lay out the problem for us? Just look at that current price, just under 5 cents. Now look down that list. It's below the 10-day average, the 20-day, the 50-day. It's below every single one. When a stock is trading below all of its key moving averages like this, that is the textbook definition of a powerful confirmed downtrend. That cruise ship is definitely sailing south.
Okay, but how strong is that downtrend? I mean, is it just kind of drifting down, or is it in a total nosedive? For that, we look at the Average Directional Index, or ADX. This is a super important tool because it doesn't care if the price is going up or down, it only tells us how powerful that move is.
And get this, the reading is 51.60. Now to put that in perspective for you, anything over 25 suggests a trend is for real. A reading over 50, that's considered extremely high. So this is telling us that the downtrend we're seeing, it's not just a casual drift. It is a powerful, high-velocity move to the downside.
Okay, so we've got the big, long-term picture. Now let's zoom in a bit. After looking at the trend, let's check out the short-term energy of the stock using what are called momentum indicators. And this is where things get really interesting, because we find our first little plot twist in this very bearish story. The RSI works just like a rubber band. If you stretch it way too far in one direction, it's probably going to snap back, right? Well, in trading, when a stock gets sold off too hard and too fast, it enters this oversold zone, anything below 30. And that is exactly where we find IVP. Its RSI is at 27.47, deep into that oversold territory. This is our first piece of counter evidence. It suggests that, maybe the selling has just been overdone and the stock could be due for at least a temporary bounce.
And it's not just the RSI screaming this. The stochastic oscillator, another momentum indicator, is at just 4. 4. That's an incredibly low number. It's indicating an even more extreme oversold condition. It's basically telling us that that rubber band is stretched about as far as it can possibly go.
But hold on. Before we get too carried away thinking a bounce is guaranteed, we gotta look at the MACD. Because even with those super low oversold readings, the MACD is still highly negative and pointing down. So here's the contradiction. The stock might be stretched to its limit, but the underlying bearish momentum is still firmly in the driver's seat.
So what do we got? A strong downtrend that's also extremely oversold. And when you have that kind of conflict, what do you usually get? A whole lot of turbulence. And we can actually measure that with volatility indicators.
And yep, the data backs that up. We're seeing a couple of things here. First, the stock's making some wild price swings. And second, it's actually broken below its normal trading range. Now that's a big bearish signal, and it tells us we're in a period of really high uncertainty.
All right, we know the trend is down, and we know the ride is bumpy. But who's really pushing this thing around? To figure that out, let's follow the money.
And following the money gives us a super clear 3-step story. 1. Volume has been high. That means a lot of people are involved in this decline. It's not just quietly drifting down. 2. The on-balance volume, or OBV, is dropping like a rock, which confirms that sellers are just dominating. And 3. The money flow index is at a very low 20.89, which confirms that money is literally just walking out the door. All signs here point to sellers being firmly in charge.
Okay, so we've just waded through this mountain of overwhelming bearish evidence, right? Strong downtrend, negative momentum, heavy selling, it all points one way. And then we get to this one last piece of data that just doesn't quite fit.
Bam! In the face of all that negativity, the report highlights a recent single-day gain of over 13%. I mean, what? For any stock, that's a big move. But for this stock, after everything we've just seen, it's pretty surprising to say the least.
So this, right here, is the central conflict. This is the big puzzle. In one corner, you've got the crushing weight of that long-term trend, with the price sitting at its 52-week low. And in the other corner, you have this glimmer of hope, the possibility of a short-term bounce, hinted out by those oversold indicators, and now maybe triggered by this one sharp gain.
You know, the report's own conclusion really nails this tension. It acknowledges both sides. It's basically saying, hey, the trend is brutally bearish, but the conditions are ripe for a little counter-rally. The big takeaway here is caution. One good day doesn't erase months of bad ones, and a real reversal needs a lot more proof.
And that leaves us with this final, really fascinating thought. We've diagnosed the illness. The charts are showing us the stock it would appear to be its absolute weakest point. But you always hear contrarian traders ask, right? Is the point of maximum fear also the point of maximum opportunity? And that's the question this technical picture leaves us wrestling with.